Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. Hey stream viewers, if you're outside of the United States, I have a cool offer. Good morning, everybody. Welcome back to another live stream. Thank you for being here, and happy, what is today? Today is, shoot, I'm missing out on I'm forgetting my days. It's Tuesday. We just moved into a new office, and I've been unboxing things for the last few days. Over the weekend, we got everything moved over here, and so this is officially the first live stream ever in the new office, which is really exciting. It's actually the third office that I've moved my company to in the duration that I've started A1 Trading, and it's been really cool just to kind of level up each time. And I think that our new place is a really nice upgrade. It's a nice space, good area of town, and really exciting. We have, I think today we're planning on putting together a little bit of a showcase video just to show off the new office for those who have been wondering. So we'll have that available to see for people. Currently, like I said, still boxes everywhere and still kind of undoing or unboxing everything, but it's looking nice so far. And I think gold is helping us out here today. We got gold pushing higher. The long position took on Friday, seems to be looking really strong for now. We came into support on the daily chart. I initiated a long position, and I'll show you current P&L on the trade. I took the trade on GLD, which is an ETF that I can trade here in the United States. We're up about $579 on this trade so far, with a big push this morning, big gap up on GLD as price looks really strong. So what's going on? Why is gold so bullish here all of a sudden? What happened? What reversed? Well, I'll tell you what happened. Rate cuts are probably coming here in the US, and the market is sort of excited about it. Not only that, you have a number of reasons that people are a bit concerned. You have still potential for geopolitical tensions under the surface between Middle East, between Russia and Ukraine. You have the US national debt ballooning higher, makes people nervous. You have comments from people like Elon Musk, claiming that the quote unquote big beautiful bill is going to continue to be a pressure point on the national debt. And so there's a number of reasons, but arguably the most sort of powerful in the short term is the expectation that the Fed is going to cut rates, and a weaker dollar could send gold to fresh highs. So I do sort of subscribe to that way of thinking, and our system, the Edge Finder, spotted a setup here on gold the other day, and on the pullback, I initiated a long position with a stop loss below structure. We're looking really good so far. Another trade that I took is the DAX, which we'll take a look at. Somebody in the audience just asked about what about the DAX trade. So I'm long the DAX as well. I'm actually trading it through an ETF just called DAX, I think. Actually, what do I search on TradingView to pull this up? There it is. So here's my DAX position. Very small trade overall, but looking good there. Here's the German DAX pulling back, giving back some of its gains here this morning. But I do generally think indices can continue to rise here off the idea of rate cuts and decently strong earnings. the NASDAQ breaking through its all-time highs, S&P 500 breaking through its all-time highs. And my view is I heard Tom Lee speaking about this, and I thought this was a really interesting perspective. He pointed out that if you take a look at the stock market in the last few years, we've thrown a lot of crisis at the stock market. And through all of it, not only has the stock market done well, it's thrived to the point where the stock market's been putting up strong earnings in an environment where you had supply chain issues due to the COVID pandemic, you had recession fears, you had inflation fears, you had political, back and forth, all these different sort of circumstances. And not only that, we've had the recent circumstance in the Middle East and the Trump tariffs and reintroducing kind of volatility to the market. We've thrown a lot at this stock market, and the stock market is still at all-time highs, and companies are growing earnings really strong. To me, it shows you how you have all these uncertainties, all these fears, but that AI is a powerful force that can continue, in my opinion, to make companies more efficient, more profitable, and should demand a premium on the stock market. The stock market should, the US stock market, which is a powerhouse, should continue to be priced expensively because it's an expensive and again, a powerful market. If you caught the dip in April and we traded the indices where I'm still in some of my index trades. I'm long the Russell still. I'll show you my IWM. This is the biggest position in my portfolio at this time, betting on rate cuts. And this thing has been going for how long have I been in this trade? I've been in this trade for 38 days, just trailing stops. This is one of my bigger wins this year. Russell index looks really strong. So I'm continuing to hold. And if this thing breaks through support, then I'll stop out and take a profit. But we're floating some really nice gains here. I've added some new trades to the portfolio here recently, the gold longs. I've been trading some currency pairs. It's been a really busy year, but it's been a good year so far. In fact, I haven't had a outperformance year by this stretch in a couple years. I think the last time I had 2023, I had a really good outperformance to the S&P 500. And this year I'm having so far a really strong outperformance. I think my portfolio is up 18 or 19%, and the stock market's up, like 5 or 6, something like that. So I'm feeling pretty good. We're hitting a win streak, which is great. I do have some trades that are in drawdown, but most of my positions have been on the correct side of things. Also, just a bit of a update here. Let's take a look at we talked briefly about it yesterday, but let's review the commitment of traders data to see what institutions are up to. You've got the Russell. I liked seeing this, right? So you had some accumulation of the Russell, closing of short contracts. So institutions closed short contracts and they added longs. It's bullish. I like that perspective. Also some risk on currencies like New Zealand dollar and euro getting a bid here. Euro's been flying. I don't know if you guys are watching that. For the currency traders in the room, the euro's just red hot right now. NASDAQ's ripping here as well in the last few months. We've got, tech stocks, I think I read that tech stocks had their best quarter in 5 years, which is incredible. So tech stocks are ripping. We did get some selling on things like the Dow Jones and the US dollar, but from my gold perspective, I liked seeing this, right? So you had an added short positioning in the institutional money flow. So we can keep an eye on this. And part of the reason that I've just been predominantly on the long side of gold in the last few years is really keep this so simple. Pull up the COT data history. If you have the Edge Finder, pull it up on your own and just look at it sometime. And what you'll see is that look at the amount of blue versus the amount of red. Okay. It's really not rocket science to say institutions have consistently held a very bullish perspective on gold. Now, what I want you to really think about too is look at the yellow line. So what we've done with our tool here for the commitment of traders data history is we've looked at it and we've said, okay, the long percentage is taking into account, long contracts versus short contracts traded. What's the percentage? This yellow line is really all that matters. And what you can see here is that institutions have maintained at or above, for the most part, a 75% long ratio on gold in the last few years. And ask yourself, if smart money has been long gold, how have they done with that? How have how have the institutional investors and traders done with their long positioning if they've been 75% long gold for the last few years? I mean, look at that chart. Are you kidding me? They've done incredible. And so the thing is, where I think a lot of retail traders go wrong is they believe they can call the top of gold or they believe they can call the bottom. But in recent years, the famous last words have been trying to call the top of gold because gold has been so strong. And keeping it very simple, right? Look at the institutions. They're super long gold. Until that changes, I don't see a reason personally to get incredibly bearish gold. We have an environment in which I think the Fed is going to cut rates. I think that there's a lot of geopolitical uncertainty in this world right now. And I think that, whether you like or dislike the current administration, there's volatility there. And so I think gold offers this nice hedge to a portfolio. And I think that institutions clearly feel more comfortable holding gold for probably the same reasons, right? There's this idea that, okay, we could get some big volatility spikes, and not only that, there's worries about U.S. national debt from a longer term perspective. The hedge to that is gold, right? So this is why I remain bullish on gold. My account's not like fully parked in gold by any means. At the beginning of the year, it might as well have been. At the beginning of the year, I had a very heavy position on gold, and it worked out really nicely. That was the largest reason for my outperformance this year, was being heavily long gold during this move. That pretty much, by the way, that's pretty much the leading contributor to why my portfolio has done really well this year relative to the benchmark S&P 500, has been being really heavily long gold and trailing stops during this move. That was the bulk, like the lion's share of why my performance has been good this year has been from that one trade. So put to the side the idea that you need to be day trading in and out of the market and always getting it right to be a profitable trader. Sometimes it's literally just you catch the right entry and you trail stops and it becomes a monster. And that, to me, this year is the name of the game, has been being on the right side of trends that are forming and just trailing stops and letting them run. So, gold for me continues to be a bullish setup on the Edge Finder. The top setups page has been just dead on this year. Check this out. If I go top setups history really quick, look at this. If I go to gold and I zoom out, gold has been the Edge Finder has been so accurate on gold this year. So gold has gone up. And the early readings, take a look at what sort of started to take place in February. The Edge Finder started getting a bullish score in February and maintained one for most of February, March, and even into April. It then went into neutral territory. Gold went sideways. And then when it started to break out again, here's the Edge Finder giving it a bullish rating, right? And another set of bullish ratings here recently. We've started to see bullishness form. So to me, that suggests that the Edge Finder thinks the gold market can continue to go up. And so I have a position with a stop loss in place in case I'm wrong. If I'm wrong, I'll take a small loss. And if I'm right, we'll see if we can capture another break through the highs and ride that trade. But the Edge Finder has been spot on with the gold price over the last few years. It's been very, very accurate. And so, I continuously monitor the score of gold on the Edge Finder. Now, where is this score coming from? Well, straightforward. It's looking at a collection of sentiment tools, technical tools, and economic data. So if you're somebody who's like, okay, gold definitely trades on fundamentals, and you recognize that, you appreciate that, but you're like, but the fundamentals are daunting and there's a ton of stuff to track. Well, that's kind of the purpose of the tool. The tool essentially looks at things like PCE data, PPI data, CPI data, NFP statistics, GDP stats, manufacturing and services PMIs, retail sales. It's looking at all these different stats, and it essentially is generating a score for each asset and generating a bullish, bearish, very bullish, very bearish reading. Am I back? Sorry, there's a little spottiness in the internet there. Hopefully you guys can see and hear me okay. I still need to wire. I'm on Wi-Fi, but I do need to wire in my computer at some point here. Again, still new to the office. But this is pretty much the daily watch list for me. Is I pull this up and I say, okay, what are getting some strong scores on the bullish side and some strong scores on the bearish side? And then I flip through those charts and I look for setups. It makes my approach methodical, repeatable, and systematic. And that to me is everything when it comes to trading, is having something that is repeatable. How many traders just kind of change what they're doing week to week based on how they're feeling, what they heard on the news, and wonder, why the heck is there no consistency in my trading? Well, it's probably because you're not doing the same thing consistently at all. You're changing what you do every single week. And so having a system, having some sort of systematic, methodical scoring system to help generate a watch list for me, it really keeps me in line with my strategy. Now, we've also added some variations here recently, like the top setups simplified view. This is actually just filtering everything and making the text a little bit bigger. We also have the top setups economic data only page. So what this does is it only looks at growth statistics, inflation statistics, and labor statistics, and generates bullish and bearish readings, removing things like the commitment of traders data and momentum or trend filters. It really just looks at the economic data. This can be great for traders that trade all different time frames, but just want to administer to the economic data. And we also have a sentiment only. So if you only want to look at the commitment of traders data or retail sentiment scores, that can be applied to your Edge Finder as well. Just click the corresponding top setups algorithm under top setups algos here. Just a heads up. Also, we just kicked off today our biggest discount that we do all year long. We are offering a 40% off discount on the Edge Finder right now. We just kicked this off here for July. So if you're somebody here watching the stream right now and you took advantage, for example, of our free week last week, if you enjoyed the free week of the Edge Finder and you're like, that was awesome, and now I can't live without it, then join the crew. There's a lot of us that feel the same way about the Edge Finder. It's a pretty powerful system and pretty powerful tool. If you would like to get access to the Edge Finder for 40% off, here is how you can do it. We'll drop a link here in the chat right now to take advantage of the huge discount that we are doing right now. And the best part is the Edge Finder is a one-time payment to get access. You get access to all of our data, all of our tools, all of our scanners, all of our indicators, all the top setups, algorithms, the watch lists, everything, one time. So you pay once and you get access to all of those, and you get future updates completely for free. There have been users of the Edge Finder that have been around for a few years and have watched this thing transform from a great software to an incredible software. And guess where it's going next? I'll leave you to decide. It's not going down, it's going up. Stock for Edge Finder is going up, up and away, and it's getting better every single day. And that rhymed. That was pretty awesome. So again, if you're interested in getting access to the Edge Finder for our big sale that we're doing here for our summer sale, it's 40% off. Like I said, click the link in the chat to speak directly to our support team to lock in that price before it ends. And just as an extra, if you stuck around, I know some people don't like when I do ads. I get it. We're a software company. We build some pretty cool stuff. So give me my chance. If you stuck around, we'll do 45% off if you send us a direct message on our website right now using the link in the chat. A real person from our support team will help answer any questions you have about the tool to make sure it's a right fit for you, and you can lock in that price before it ends. So there you go. So again, I'm in a long position on gold. The thing has been a nice start, but we have, in my view, plenty of room to go for gold. So I want to talk about something with this gold position. I'm not closing this, right? So people will ask, okay, Nick, maybe you saw my Sunday video, Edge Finder was bullish, I had a pullback to support, and I mentioned that I got long. And so I've had people commenting on the videos and saying, what now? Is it gonna go back down? Like, is it gonna close out? And this is why, unfortunately, people just struggle so much in markets. They have no willingness to hold on to winners, and they panic when anything goes wrong, right? So I am really relaxed with my gold trade. I'm not pressed at all because the trade size is not really big in my portfolio. It's actually quite small. It's up. I have 80 shares of GLD. It is actually a very small position, and it was only an initial trade attempt for me on gold. This one's worked out. I would have added a bigger size position if we saw a bigger move to the downside on gold. But I've got a trade on. It's going really well. I'm up $550 on this trade. And my plan is to trail stops further from here if we get some sort of higher low, higher high sequence, specifically on the daily chart. So I am in, let me repeat it, no rush to close out, to take profits, to lock it in. In fact, what I did this morning, the only thing that I did was I actually, let me see, where's my Discord here? The only thing I did this morning is I just I just trimmed my stop loss slightly. So my initial stop loss was slightly bigger. This morning, I just trimmed it. So I'm not trying to lock anything in. I'm not trying to overly tighten my stop loss. I've essentially just seen the price move in my favor here. We bounced off, and all I did was take my stop loss, which was like here, and just trimmed it very slightly to account for the lows of this low. So if this price comes all the way back, which it could do, let me be very clear, right? Gold, it's not a profitable trade yet. We've had a nice move, and I'm managing the position, but we could still theoretically give back all those gains and take a loss. And it's interesting because a lot of people, like, that idea crushes them, right? That scares them so bad to think, I finally got a winning trade. The thought of giving it back is too painful. It's too painful, right? So what do? You guys probably know, because I've done this, and some of you may have done this too. You aggressively close out. But can you imagine? I mentioned earlier in the stream that the predominant reason, the major reason why this year has been a really good trading year for me was this trade right here. I went long gold right around this area, and I let that thing run, and it became a monster. And it was my best trade this year. And so then the market pulled back, and I stopped out. I closed out of my position right there. So I went long from here to here and stopped out somewhere around this area. It was approximately in the neighborhood of a 11 to 12% move on gold, a appreciation of $300+ per ounce. And in pip form, I don't even know, thousands of pips. Gold moved dramatically, and I was able to capture, because I trailed stops and I was patient with the trade. I held through that monster push. But can you imagine if that was what led to my outperformance this year? Can you imagine if I had taken profits just because I got nervous right there? Can you imagine what that would have done to my year? I'll tell you, I'd still be up this year if I didn't have this gold trade. But it would not be the year that I'm having if I had closed out too soon. So to me, the bigger risk when it comes to trading is taking profits too soon, rather than the risk being, well, what if you give back this profit? What if I do? Who cares? On to the next trade, right? You got to be a little tougher than that. When it comes to trading, guess what? You're going to have some heartbreak trades. I've had more heartbreaks and breakups with charts than I care to admit, okay? There's plenty of times where gold moves in my favor, great, and then we give back those gains. But that's the price I pay in order to capture those occasional moves. Like, you cannot have this move and also take profits as soon as a good move happens. Does that make sense? So that is my thought process on gold. I have plenty of room for this. I think that gold has plenty of room to move to new highs. I think rate cuts are coming. The dollar is weak in my view. We pull up the US dollar. Look at the dollar. The dollar here, to me, the chart is suggesting that we should continue to move lower. The path of least resistance would be a rally in the dollar, would be met, in my view, with sellers like myself who think rate cuts are likely around the corner. And so I'd prefer to short the dollar versus the CAD. Let's go back to my setups here for a second. Top setup simple. And let's filter for major and minor. Oh, let's just do major currencies. Look at this right now. Currency traders in the room. This is how simplified your system should be. Now, you may not use the Edge Finder. You may use something else. You may use a different approach. But I'm telling you, I've done this since 2016, 2017. In the early days of what I did, and some of you guys are right here doing this right now, everything I did was manual. And it held me back substantially. Let me tell you why. I used to do what is now automated in my life with the Edge Finder. I used to do it by hand. And it held me back for years. Now, I didn't know that it was holding me back, but you don't know what you don't know. That is simply how it goes in the world, right? There's still things right now that I don't know. And if I had known them, it would improve my life dramatically. The Edge Finder has not only made me a more profitable trader, it has saved me countless hours. Countless hours. Now, why do I say that? Well, I show up to the office at 7 a.m. I sit down at my desk and I say, what's on the menu today? That's essentially what I do now with my trading. I say, what's on the menu? Anything? Well, let's look at dollar crosses, Kiwi dollar, Euro dollar, Aussie dollar, pound dollar. I mean, right now, this is easy mode. This is easy mode in terms of bias. The dollar, in my view here, based on the economic data, when we look at sentiment, technical, and economic data, we don't have to do that by hand. We could do it by hand. If you want to spend 3 hours a day, go for it. I used to do it. It was not fun. Instead of doing it by hand, we have a system that scans sentiment, commitment of traders, report, looking at put to call ratio, looking at the AAII investor sentiment. We look at all that data. It's all in front of us, and the system just says, okay, generally it's pointing towards bullishness or bearishness. And then I handpick the ones that look great based on technicals. It simplifies the process, right? So if you are, Chris Campus says something's definitely wrong with my trading. Look, I know what that's like to feel like you're chasing your tail and changing things every single day. By the way, we have Powell speaking in a couple minutes, titled Policy Panel. I see, Chandler, you're pulling up the Powell speech. Can we do it this way today? Instead of watching it, let's keep it on standby, and I'm just going to keep an eye on headlines. That way I can keep going through charts here today instead of just watching the stream. I'm going to keep an eye on my left-hand side monitor to breaking headlines if there's anything that really matters that comes out of it. But we'll see if anything comes out of it. Sometimes you do get policy panels that cause big volatility. If that happens, maybe we can jump to the stream if need be. We also have, by the way, at the same time, we have huge stuff happening. We have Lagarde speaking, Bailey speaking, Ueda speaking, and Powell speaking. This is the Bank of Japan, Bank of England, ECB, and the US Fed. That's going to be potentially market moving. So instead of watching one of them, I'm going to watch headlines to see, what's potentially moving it. Policy panel, the ECB forum. Yeah, so they're speaking at the same event. So yeah, I will keep an eye on that, guys. If we get any major market moves, I'll do my best to pull up and find out what that information is, what he said, etc. That way we can keep an eye on charts in the meantime. Russell's pulling back here a little bit this morning. S&P is pulling back just slightly. NASDAQ just slightly. There's some drama this morning between Musk and the president. Tesla shares down 6.6% here this morning. Stock market just opened up, so we'll see what happens with Tesla. Did do a video on Tesla. If you're a stock person, stay tuned. I got a video filmed this morning for the stock channel. Is anybody a stock channel person or a stock trader or stock investor? Like, I'm talking about Amazon, Apple, Airbnb, Google, Tesla. Like, if you watch stocks, let me know in the chat really quick. I just want to know how many of you guys care about stocks on this channel. And if you are not already subscribed to the second YouTube channel, Trader Nick Stocks, check it out on YouTube. It might be useful to you to add that to your subscriptions as well. If you're interested in learning about companies, valuing companies, trading stocks, investing in stocks, second channel is kind of my playground for that. Can you start a top buys, top sells with the stock box? Joshua, we're going that direction. Are you kidding me? The stock box. We're actually working really hard on we are working overtime on stock scoring right now. So Stockbox is leveling up too in the background, and in the stock market channel, I think is going to be a cool place. If you subscribe now, you might be in the first 1,000 subscribers. I don't think we've hit 1,000 subscribers on the second channel. So yeah. By the way, guys, like I said, we are keeping an eye on headlines for anything potentially market moving. We're just not going to watch the speech. If you'd like to watch the speech, by all means, go find it on the internet. But I'm instead going to give you the price action response. We'll take a look at charts. And if anything of substance comes out of it, we'll pull up the reasoning and discuss it. Yeah, thank you very much for that link in case anybody would like to watch it. I mean, please don't leave us. We love you. We want you to stay with us here on the stream. But if you must leave, it's kind of one of those things. If you love someone, let them go kind of thing. So peace be upon you kind of thing. So gold's up 1.3% here this morning. The reason I still like gold, and I talked about it earlier in the show, I think rate cuts are coming. And I think that the bond market is sort of suggesting that. Let's take a look at price action for the 10-year yield. You've got momentum here to the downside. Momentum on yields is moving lower. You've got bonds looking, in my view, pretty attractive, right? Starting to break out here a little bit. This is TLT. This is the 20-year Treasury bond ETF. And I think that looks attractive. Quick check on stocks here this morning. Come on, Tesla, give me a bounce here today. Tesla is my largest individual stock position. I've shorted calls on 200 shares of Tesla. That's why I'm only showing, I actually have 400 shares of Tesla, but 200 of them have been, they're covered calls right now. Coinbase actually pulling back here a little bit as well. I know, let me get off stocks, but stocks are kind of like it's like my side chick on the Trader Nick channel. Because I talk predominantly about on, the main channel, I talk all about currencies, indices, commodities. But it's kind of like if you find the Trader Nick stocks channel, I've had some people find me there and they're like, I didn't know you do stocks. This is cool. And I'm like, yeah, I actually started on stocks, believe it or not. Stocks are kind of they'll forever be like a special, memory for me, is that's where I started in markets. And I've since gone way further, I would say, in the macro side, looking at, the dollar and commodities and indices at the higher level. Like I consider myself a top-down market analyst or market, investor, trader, whatever. Top down in the sense that I look at the macro stuff all the way down to the micro, right? When you're talking about a company and their financials, that's more micro. If you're talking about the general state of the economy, both globally and domestically in the US, for example, that's more macro. You're looking at the big picture first and then picking stocks. But, there's some traders that are actually bottom up investors where they pick great companies and they kind of ignore the macro at first. But I'm more, I would say, of a top down trader / investor. So let's see where we at. Like I said, going to keep an eye on any potential headlines that break out due to this speech that's supposedly happening. If you have anything, by the way, please feel free to share it in the chat, just because there are many of you and just one of me. But I'm going to not watch the event. Trump put out something this morning saying the tax bill will hopefully pass today. Let's talk about that really quick. We have to talk about it because it's very, very impactful to stocks. And I think this is probably what I'm going to theme my video on today. So let's talk about the tax bill stuff and let's talk about the tariffs. Okay. Now, on my channel, I do my best to kind of remain as politically unbiased as I possibly can. But this stuff really impacts markets. What you do with a tax bill and what you do with tariffs, it impacts what is most important to the stock market. You ready for what's most impactful to the stock market? Does anybody know what? Drop it in the chat really quick. What do you think is the single most impactful thing to whether stocks go up or down? And I'll give you my take in just a second, but I just want to give you guys a chance. What do you think is the most impactful thing to cause the indices and everything else, by the way, the dollar, gold, all of this stuff? What moves markets dramatically? You ready? Sentiment is a really good one, but there's one more. There's one more thing that I would say moves the market even more than sentiment. Well, I mean, this answer kind of, it goes with sentiment, to be fair. This is it. Monetary policy, but more so specifically, stimulus. That's the word. Stimulus is ultimately what moves the market aggressively. Why? Because if stimulus in the markets is aggressive, like if this tax bill adds stimulus to the market, if it makes it so that tons of money floods into the system, right? And that may come at the cost of taxpayers for kicking the can down the road. But the stock market doesn't care. The stock market says, if you're going to give me tax breaks, if you're going to give me stimulus, if you're going to put money in people's pockets, companies are going to rip. Now, again, I'm not saying necessarily that that's right or wrong, because we could also point to tariffs and say, well, if tariffs could be a tax to the consumer, it could actually hurt the ability of the consumer and could take away from the stock market bullishness. This is ultimately what the stock market and the indices are hunting. Is there stimulus here? Is there stimulus here? Is the Fed going to give us stimulus by cutting interest rates? Or is AI going to give us stimulus by making companies more efficient and causing higher profit margins? That's what the stock market obsesses about, is stimulus. Because if you get an environment where taxes are cut for businesses and things look more favorable towards businesses, or gives people more money to spend money, right? The stock market just says, then companies demand high valuations. And higher valuations means that the stock market as a whole continues to move higher. I know Powell is speaking. We're keeping an eye on it. If there's anything that is said that is of substance, we're gonna address it. But I have a lot of charts I want to get through today, and I'm keeping an eye on headlines. If anybody has headlines from Powell that are really interesting, let us know. What is stimulus? Good question. So stimulus is simply the idea of money flooding the system. In the pandemic, right? The Fed cut interest rates dramatically and the stock market absolutely ripped. What happens when you cut interest rates? People can borrow money at lower rates and they go buy money and inject money into the system, inject money into the markets. Companies make more money because money's flooding in. If the Fed cuts rates or the government spends money in the form of cutting people's taxes, right? The stock market loves it. Now, again, I'm not saying whether or not that's the right call or not, because it could cause the stock market to go into melt up mode and ultimately could crash back massively. We don't know. But the point is, the idea of obviously cutting taxes, the standard Republican kind of idea is like you cut taxes and take in less from a government level, reduce the size of your government, and then, companies, the private sector gets bigger, stronger, and gets, they do more of the heavy lifting than the government. But of course, there's some downsides to this. Elon Musk has been very critical of the big, beautiful bill because it sort of follows suits with the standard politician. Now, again, I know I'm not trying to get political here, but it doesn't really matter if you're talking about red or blue presidents. But there is a standard here in America about how you get votes, which is you spend a ton of money and you add debt to the national debt. And this theory, in my opinion, if you do continuously to cut taxes, right, it adds to national debt. Tariffs, this is, again, tariffs are largely seen by economists as just another way of taxing people in a different way. So where they may cut taxes over here, they may just collect those taxes over here in the form of tariffs, right? So it's just kind of moving money around. It's a weird concept. That being said, I think the market is mostly excited about the idea of lower taxes. And this is, if you go back and watch the streams and videos during this time or during the election time, this was what everybody was talking about too, is like, tax cuts and more efficiency from that side of things. And so that was the exciting. But then we got more news on the tariffs, which caused the market to tank. Since then, we've seen tariffs sort of the worst case scenarios were put to the sidelines, and now we're focused more on the tax bill. So to me, it makes more sense that the market continues to push higher. So we've got rate cuts and tax bills on the docket. To me, that suggests that stocks should move higher overall. And so I'm a buyer of any dips that we may see in the coming weeks and months. That's a perspective that I have and is largely reflected in the Edge Finder's top setups page. If I go to indices, we have bullish ratings on the DAX, the Nikkei, the NASDAQ, and the Russell. Part of this is because we've got cooling inflation, which is a rate cut stimulus, right? So if you ever want to know where indices are going, one of the most important things, in my personal opinion, is keep this in your back pocket. This word, stimulus. Did I spell it right? Not sure. Stimulus is the word of the day, okay? It can come from the Fed. It can come from the government, kind of the same thing, but from fiscal policy, from monetary policy, and it can also come from just straight up businesses making so much money and stimulating. Like, for example, NVIDIA, this AI stuff is a tailwind to the rest of the market because so much money is getting spent on chips, and that's like just it's a stimulant, right? You see what I'm saying? That's what we're trying to study when you're talking about indices from a macro perspective. Keep your eye on the ball. Money flow, stimulus. That's what makes indices rip higher. Why? Because companies get valued at higher rates when there's tons of optimism, speculation that more, profits are going to come in for companies. At the end of the day, more stimulus. The reason that's so bullish for stocks is because it means that the stocks within the indices are expected to make bigger profits. That's ultimately what drives stocks, is earnings per share growth. So, we'll see what happens with the indices. But if you've been on the ride with us, it's been a really good year due to the buying the dip of the sell-off that we saw in April. And I think that there is continued upside from here. I'm trailing stops on my Russell long position. Why do I like the Russell so much? Well, again, it's a bullish setup on the Edge Finder, but also because small caps are disproportionately set to rise, in my view, if you do get rate cuts. Hoffman, thanks very much for this. Fed's Pal says the U.S. economy is in pretty good condition, or pretty good position, if we ignore tariffs, inflation behaving as expected, and we expect higher readings over the summer. So a little bit of hawkishness on that. We went on hold when we saw the size of the tariffs. We're taking time for as long as the U.S. economy. Not sure if I'm reading that right. Economy solid. Prudent thing is to wait. We went on hold when we saw the size of the tariffs. Stock channel person, thanks for the extra channel. Thanks, Polo, for watching the stock channel. Appreciate your support over there. In just a second, guys, we are going to be bringing in the long-awaited return of Forex James. In fact, before we do that, let me just remind you, Edge Finder sale, we just kicked it off. It is our biggest discount that we do all year long, which is a 40% off discount on the Edge Finder. Just a heads up, it's a one-time payment to get access to our tools. You can scan all sorts of commitment of traders data, retail positioning data, economic data, our top setups algorithm, the put to call ratio, and just a whole plethora of other data. If you don't have a copy and you're taking your trading seriously this year and would like to lock in the one-time price for the Edge Finder, for those who send us a direct message during the live stream, we're going to be offering 45% off, nearly a half off discount on the Edge Finder, one-time payment, and you get access to all future updates for free. To take advantage of this discount before it ends, click this link right here in the chat to speak directly to our support team. Or if you're watching at a later point, head over to a1trading.com and you can explore the website there for promotions, or you can click the link in the bottom right hand to speak directly to our support team about the sale. Up next, guys, we've got Forex James returning to the stream. He'll be taking over the stream for a little bit, going through some charts that he's watching in this market. I know he's watching the DAX, and he's always watching currencies as well. So stay tuned. Forex James is up after this. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free to join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, extra clips and bonus clips from the live streams and videos, giveaways to our products, prop firms and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hey guys, long time no see. Had to take some time off over the past week and a bit. Had to go and close some billion-dollar deals in the US, you know, day-to-day antics. Yeah, so good to be back. It feels like a while. It's a bit strange to be back on stream. Yeah, I've not done any streams, no videos. Been a little bit ghost for a while. But yeah, I had to go and take care of some things abroad. So start of open positions. I've got these positions on Euro Pound that's still open. Here are the positions on MT5. Let me just pull those up for you. So these are currently in minor drawdown, nothing big. You can see the lot size is only 0.05, so it's very, very small. Collecting positive swaps on that ride, but it's a pretty much a mean reversion trade. Cut losses here, so the expected loss, if I do end up cutting the loss here, would be about 1.5%. So you can see how tiny the position sizes are. Very straight. I've spoken about Euro Pound quite a lot actually in the past, but for anyone that doesn't know, this market's behavior is very repeatable. So we often have very, very sort of not predictable, but very sort of typical price action, if that makes sense. So we have these upsides followed by further downside, followed by quite aggressive upside, further downside, aggressive upside, downside. So it's essentially just a ranging market because we have obviously Euro and the pound very correlated. It's just one of those markets, similar as the Aussie New Zealand. So just chilling in this one, waiting for it to play out, just collecting swaps. I had a really, really nice position here on BBAI, which is, BBAI, yeah, which is Big Bear AI. This wasn't my trade. This was a tip one of my friends gave me. So I got, I think it was a 70% return on this one, actually. It wasn't on a trading account. It was on a CFD account, I should say. It was on an investment account. But it was like, I think I invested £600. That's about equivalent of about $800 and made about £400 return on that one. So not huge, but sorry, not a huge monetary gain, but the percentage gain was lovely. Anyway, let's move on. James, it's possible to understand why you wear a hat until today, even though you have such strong, thick hair. No, I wore the hat for, I think it was like a month, 2 months. That's because I got a really bad haircut. It was way too short. So I've got quite a big head and quite a big forehead. I got a bit of receding hairline. So because my hair's so long and thick, I can hide it when it's longer, but when it's short, I look a bit like an M&M or a Malteser or something. So it's not a good look. So yeah, that was why the hat was there. Euro dollar. So I'm definitely not bullish on the dollar at the minute. I think it's very difficult to be a bull. I think the only real redeeming case is just price action. In terms of really what's going on, I can't justify being much of a bull here. The only thing I can really see is sort of the $95 to $96 price range. We've got the Bollinger Band low here, is 200 Bollinger Band, and we do have a regression trend here from 2008. So we do have longer term technicals coming into play, but of course, technicals come second to fundamentals. So it's not a huge deal, but it's something I am paying attention to. Do we break lower from here, or do we start sort of ranging here and then come back up? I don't know. But again, just paying attention to the market cycles of the dollar. It's not uncommon for it to have these periods where we have a huge rocket to the upside, range and downside, then another pop, then range and downside here, another pop, range and downside, and then are we going to get this pop again? We'll see. I'm not here to really try and guess that right now. I'm just sitting and sort of waiting. I'm not really in anything apart from Euro Pound. But yeah, let's go back to Euro Dollar. I would quite like to be a buyer, and I'm going to show you something in a second from Bloomberg. But the only thing, again, just looking at the technicals, the main thing that's sort of giving me the heebie-jeebies, I guess is the word, is again the regression trend and these Bollingers. So I don't really trade with Bollingers, but they are quite good for gauging overbought, oversold conditions, similar to an RSI. Sort of very basic, but again, they can be quite relevant at times. So we've broken out of this trend on the euro dollar. And again, this was formed back in 2008. And we've not really broken above the Bollinger since, well, 2008, actually. We've been within the Bollinger that whole time. So I am thinking that this market's a little bit overextended. So I'm not saying it can't go higher, but I think it does need to see some sort of pullback, or it's likely we'll see some sort of pullback before we go any higher. So in terms of price targets, 1.2 does seem like the next stopping point, really. So if we take this, and it's from Bloomberg, I found this on Twitter, it's not my thing. The European Central Bank Vice President said an advance in the euro beyond 1.2 could prove tricky for policymakers, but current levels aren't cause for concern. In rare remarks by the ECB official on common currencies exchange rate, Guindos, I'm not sure how you pronounce that name, told Bloomberg TV that the speed of the euro's ascent has been more worrying than the current level. So essentially what they're saying there is the fact that the euro dollar, or the euro, has gained a significant amount of value in a short time. It's not necessarily the actual value of the euro, if that makes sense. I think I think that 1.17, even 1.2 is not something the Spanish official said Tuesday on the sidelines of the ECB's annual retreat in Sintra, Portugal. We can overlook it a little bit. Something beyond that would be much more complicated, but 1.2 is perfectly acceptable. So if you were looking to be a buyer in euro dollar, it does make sense on a fundamental basis. We do have here, we do have the euro dollar reading bullish. It's actually the most bullish reading on the Edge Finder right now, just ahead of the New Zealand dollar. So we do have data to back up the long positions, but again, these technicals are a little bit concerning to me. So if I was going to take a trade here, I want to be looking for a retracement back into market structure, which in my view is back towards 1.16. I'm actually not sure if this is a fib level as well. I don't think it is. Let me just double check. Oh, it is actually. It's almost perfect. I didn't even see that. So yeah, that would be a really, really strong pullback for the euro dollar to then go long. In terms of price targets, I don't want to target 1.2 just yet because I think there's a lot of eyes on 1.2. So I would like to go just below at maybe 1.195, I think would be fine. So just below 1.2 is sort of my idea for a target. It's sort of the similar reason when I'm looking for take profits and stop losses, I don't like to, let's just say, just a visual example. If I was going short here, I wouldn't want to target the very, very low of this wick. I like to target sort of the body just because we don't always get that exact fill. Similar thing with 1.2 and sort of round numbers. We don't always reach that round number, even if that's sort of where the talk of the town is, if that makes sense. But that's more of just a sort of throwaway thing. Don't take that too seriously. Yeah, Sean, it's all right. Don't worry. I think we're playing defensive at the moment. There's been some haters against me over the past couple of weeks, so I think they're just being a bit cautious. But it's all right, Sean. I know you're only joking. Oh yes, we've got the things going on. Let me just have a quick. Let me just pull this over so you can see recent headlines. Let me have a look. Power will depend on data. Fed's policy when sorry, I can't speak. We're modestly restrictive at this level. Bailey expects restrictiveness to come down. US dollar falls versus Swiss franc. US dollar modestly restrictive at this level. Okay. So nothing really that concerning. The Fed sounds neutral to hawkish in my view. I don't know. The dollar seems like it's basically front running rate cuts. Although I'm just not really seeing that at the moment. I am sure the Fed's going to cut, but I'm seeing sort of July, September being thrown around quite a lot. And I just don't really see that happening. It might happen September, but July, yeah, I don't see us having a rate cut in July. I think the markets might be a little bit ahead of themselves. Yes, I agree with Ball out there, actually. What's my take on NASDAQ? Pound dollar. Okay, what's your buys on GJ? Okay, we've got a few different things here. I've only got a short period of time. I've got a meeting I need to get to, so I've got, I think, just over 15 minutes left. So let's have a quick run through. Let's quickly take a look at some of the charts I'm looking at, and then we can move on to some requests. So dollar CAD doesn't interest me that much. If we do see a substantial pullback, it's a similar thing to euro dollar. I think these dollar pairs, or I think the dollar in general, can head lower, but I just think the market's very crowded right now, to be honest with you. I think the mass consensus is short dollar. And what do we normally want to do when everyone is looking at the same thing? Everyone has the same idea. We generally like to counter trade it. Now, I just want to specify, I'm not saying buy dollar. That's not what I'm saying. I'm just saying I want to be very cautious selling the dollar, because what you don't want to do is have everyone selling dollar since the 13th of January. You decide to finally sell here, and then something happens. It could be a Fed pit, it could be anything. Anything could happen. And then the dollar changes trends, and you've just been caught at the bottom when you've been watching it for the whole 6 months of the year. So that could be, or 7 months now, actually. So that could be a bad situation to be in. So I'm just waiting for that pullback. Same thing here on dollar Swiss. I think dollar Swiss is a beautiful trade to get into. But again, I'm just waiting for this pullback. I think very extended markets. So yeah, I'm kind of flat, really, because obviously I was away last week, so I didn't place anything. The only thing I was really doing was monitoring euro pound, and that was more from a management aspect. That wasn't actively trading. So this sort of, I only really got back to the desk on Sunday. So yeah, I've kind of just been watching. There isn't anything else for me to do. Aussie New Zealand seems really attractive as well. We do have a slight divergence in central banks. Let me just double check I'm right on that, actually. The RBA, neutral to dovish. RBA poised for a 25 basis point cut in July, and we've got the Reserve Bank of New Zealand neutral to hawkish. RBNZ likely to hold rates at 3.25 in July amid mixed economic signals. So it does provide a nice central bank divergence. As you guys, if you watch any of my content, you know I love an interest rate thing, and central bank divergences. That's my bread and butter. So if we can see this 50% pullback level, I'd be quite happy to just trade it into the previous lows. Very straightforwards, nothing complex going on there really at all. Gold has been on my watch list. Now, I was actually quite fortunate that I wasn't around for gold, because I was looking to go short, and I would have been stopped out if I did take it. So I was looking for this. So I was looking to take a short position on the 0.5 level, because I just don't really, and I still don't see much of a reason for gold to be that high, or to continue higher, I should say. So again, I want to just say I'm not bearish on gold. Well, I'm not super bearish on gold is what I should say, but I'm also not super bullish. So I was thinking we might have a slight reprice in gold, because we've had a little bit of a de-escalation in the Middle East. Fed doesn't look like they're going to cut in July, as far as I'm concerned. So yeah, in terms of gold, I was actually looking to go short here. Luckily, I didn't take it. But yeah, that was one I was looking to do. And I'm still not in a position where I want to buy gold either. So I'm just flat really on gold. The other one is DAX. I really like DAX. I saw Nick was in DAX as well. Sorry, I'm seeing a few messages coming out. I'll take a look, otherwise I'll get sidelined and start rambling as I do. So yeah, DAX looks really good to go long. As I said, I saw Nick, I think he's already in a long position, so I'm a bit behind on that one. The data for the DAX is beautiful. We've got retail long, but that's not really a factor when it comes to the indices market, because generally everyone's long anyway, unless there's some reason not to be, but in this case it's not really that. Seasonality is very bullish. Trend reading, GDP, we do have manufacturing against it. Retail sales aren't great either, but inflation, unemployment, and interest rates are all supportive. We do have, so this is a note I made when I was planning the trade. PMIs, ZEW and IFO all surprised to the upside. 270 billion euro in front-loaded stimulus, corporate tax cuts, and massive public investment are kicking off a German revival. ECB is cautious on further rate cuts as inflation runs hot, but Germany's balance sheet allows aggressive fiscal expansion without bond market fallout. Capital is rotating out of politically unstable France and into Germany. Now, if we layer that on top of the idea, or not the idea, the fact that the DAX has had an incredible recovery since that tariff crash, if you want to call it a crash, that's fine. But since the DAX fell, what, 25%, when tariffs were a big deal, we've had new all-time highs printed, or a full recovery and new all-time highs printed. So I'm quite happy to just jump in that wave. I'm not looking to counter trade it. I'm just, if we can see this pull back a little bit further, I'll be jumping into a long position. There is a slightly more aggressive entry into this market that I'm considering, which is just a shorter term fib here that we can see from the most recent low to the most recent high. We do have a rejection here off the 0.618 to the 0.5 level. So that seems quite attractive as well. But yeah, I just want to be super, super cautious, because another thing, I know I'm kind of just going off on my own thing here, but another thing we do need to keep in mind is summer trading period. So we can generally see less liquidity in the markets as we get the institutional guys stepping away from the desk for summer holidays and all those types of things. So we can see more irrational moves, if you will. It's more, or we can expect a little bit more noise. So yeah, it can be tricky. Miami was interesting, to say the least. I've got to say, it's in a beautiful place, but I couldn't live there. There's too much food. There's too much going on. I went to a baseball game. That was cool. Had a hot dog there. Not In and Out. Shake Shack, Panda Express. I had everything. And I've never felt so greasy and gross in my life. But it was a great place, and I got some things sorted out, which was nice. JOLTS better. Sorry, guys, I'm a bit behind on the news as well. As I said, I've a bit limited time here, so I was trying to get everything done. What was the result here? Good JOLTS, 7.77. So we've had more job openings, previous beat forecast, and manufacturing also popped up to 49. So we're still below 50. So it's not an amazing number. However, it's definitely an improvement. So that's good. Also, what I want to say is be very cautious this week, because we do have July the 4th, which means we do have NFP, unemployment. We have all of Friday's news on Thursday. So don't go into Thursday thinking, oh, tomorrow we've got NFP, because you'll get an unhappy surprise, or maybe a very happy surprise, but you might get a surprise. Okay, so let me just see if I've missed any requests. I think I've missed quite a few, sorry. Look at Platinum. Yeah, Platinum's had I keep seeing Platinum all over Twitter. It's had a huge run, hasn't it? But it's was it XPT? Is that the ticker for Platinum? Yeah, Platinum's had a huge run. It's like a meme coin. Hey, new here. Are you a full-time trader? No, I don't like to. No, not really. I'll be honest with you. I've got different things I do trade. I have elite traders. I've got another business on the side as well. So no, I'm more of a part-time trader, if that's probably the right wording. Dollar is going to slap CAD out for the next few weeks. Do you think? Are we going to see dollar CAD up? Is that your idea? What's my view on gold? Yeah, sorry, I didn't speak on that. So I would expect the dollar to be up actually after the news today, which it is. However, gold doesn't seem to have really shown any reaction. Had a little bit, one bearish 30-minute candle here, and a wick to the downside, but yeah, it's not affected gold, which is interesting. But yeah, dollar doing quite well actually so far off that news. I don't think it's enough to change the trend, obviously, but it is one of those ticks in the boxes, maybe just for a little bit less pressure. But I think the main thing really is going to come down to obviously the Fed and Thursday's news, obviously the labor market data. Naveen, that's a good point. Yes, I think the markets are more centralized at the moment around, or more focused, sorry is the word, more focused around Thursday's data. Silver as well. Yeah, I've not had any eyes on silver at all. It is approaching 40. I've been looking at 40 for a long time. So $40 has been my long-term target for silver. The annoying thing is I'm not in it. I was a buyer of silver. When was I in silver? I can't remember the exact period. It was somewhere in this chop. And I got out for a decent profit, but it wasn't anything substantial. But I had profits at 40. but I just didn't want to hold it. And I can't remember what that trade was about, to be honest with you. I can't remember why I cut it. There would have been a reason, but anyway, I would actually be quite happy to buy silver. So the approach here would be, there we go. So if we can break and hold above this level, I think that might be a nice sign to go long on silver here. So we'll be looking for the very sort of typical break and retest of the highs of the range. Stop loss, you could be really aggressive, put about 50% in the range, or you could put it obviously below, which is a lot more conservative. It does cut the R&R drastically, however. Thoughts on NASDAQ? Yeah, let me have a look at NASDAQ. I'm actually going to add silver to the watch list because I think that might be something I want to pay more attention to. Sweet. Let's see if, I'm not sure it's on the edge finder. Let's see. Oh, it is. So we've got a bullish reading of 6, which isn't amazing, but it is a sign to buy. And we've actually had a really nice rally here. I haven't even noticed. Okay, so NASDAQ, again, similar to DAX, is fully recovered from the tariff dump or the tariff crash, whatever you want to call it, and now created new all-time highs. So now it might be a case of just waiting for another pullback to go long again. I don't know why I said again, but to go long, maybe to these highs here. Let me just change this back. Oops. Okay, hold on. Let me just draw the rectangle properly. There we go. So it might be a case of waiting for a pullback into the highs to then go long. Again, it would be a very, very simple break and retest entry here. Stop loss. I think it would just have to be here. I don't really see another option. With the NASDAQ, I think the best opportunity really, or the best method would be to trail stops in this situation, because when we're approaching or we're in all-time high territory, there really isn't any structure to trade from, or there is no structure to have a take profit at. So where you put, you could have a take profit here with a, 1 to 2, and then the market could just drift to the upside for the next 4 or 5 months, which is completely possible. So what I would like to do is actually just trail stops really gradually and just allow the market room to breathe and try and capture as much of the move as possible. So I think this again actually is one that I'm going to add to the watch list. Like I said, I've only really just got back to the desk, so I'm kind of looking at all of this with you at the same time, or for the first time with you. The Nikkei, let's see. Oops. Nikkei's also, I think, getting a good reading. Is it? Yeah, similar to NASDAQ, actually. It's got a score of 6. So nothing overwhelming, but it's still something to layer onto the idea of going long. I'll be honest, I don't really see much here. The only thing really is this 50% fib level, or the zone with the fib here. Beyond that, there really isn't much of a technical setup for me. So it'd be a little bit going in blind, but that would be obviously your choice. But yeah, in terms of technicals and even fundamentals, I don't really have that much for you. I do apologize. Please have a look at US dollar CAD. I reckon 1.37 or maybe 1.39. It's in the process of creating the first wave. Naveen, when you're talking about waves, you're best to chat to Ball Out, because waves are not my thing, but I can definitely have a look. I don't really even know how to draw waves. Okay, so you are looking for, what was it? 1.37, 1.39, let's just say 1.38, just to be sort of in the middle. Yeah. Okay, so you're looking pretty much for my entry area to get sort of tapped into, which I would agree. I don't see any reason that the market couldn't come up here, especially after today's positive US data. It might just be a reason to unload some of the shorts that are going on with the dollar. Again, I'm not saying that we're going to see a trend change, but it might just be a case of we might see some buying pressure in the dollar, maybe some people buying while it's low, and then looking to have small pullback, small mean reversion, then loading up on shorts again. We'll see. But I really do think the next couple of weeks direction on the dollar is going to be heavily influenced by the data that we get on Thursday, which is obviously NFP and unemployment and average hourly earnings. GB CAD multi-year high. Is it? I could say pound CAD isn't something I ever really look at. It does look. I need to change this rectangle. Sorry, just bear with me for a second. Let me fix this. Okay, there we go. Yeah, so I mean, speaking from a technical aspect, this is a break and retest. So we've broken above the previous highs. We've retested here. The thing I don't like, however, is the fact that we've broken above this Bollinger. I would really like to see price come back into this 200 moving average, then potentially come higher. So that would give me an entry at sort of this level here. So it'd be the previous highs, roughly. So that would be 1.85587. Yeah, I'll be honest, it's a little bit too high for me to want to be a buyer. But if we could come back down into this 200 moving average, that would be, I think, the best option in my book. Okay, so I forgot to mention, I'm looking to buy Tesla. Now, as I always say, I'm not a stock guy. I don't know anything about the stock market, really. Oh, sorry. I don't know anything about the individual stocks. I don't know anything about the earnings or the PE ratios for things like Tesla. It's just not something I look at. However, I think on a weekly time frame, if Tesla can come back into this 200 moving average, which you can see historically has been quite a respectable indicator here, slight break below, but it's still held in the long term. Here again, slight break, but still held. Here it held as well. So if we can come back down again, I'd be quite happy to buy some Tesla for a long-term investment. So it wouldn't be a short-term CFD trade. It would be a hold for 1, 2, 3, 5 years maybe. Isn't it overwhelming looking at all these charts? Not really, because I'm not going into a lot of detail. I'm not looking at real rates and all the monetary policies and like everything going on. I'm more just looking at the basic fundamentals that are on the Edge Finder, and I'm looking at the basic technicals as well. But yeah, if I was going into now I could sit here with you and go and look into all of Tesla's data and all those things. But first, I don't have time to do that, and firstly, there is just no reason really, because I don't even know if I'm going to take the trade. Yeah, I don't know much about Tesla's is it books or like their earnings, PE ratio. I don't know much about that stuff, but from an outside view, from an amateur view, I guess you would say, I quite like Tesla. I think it's got quite a lot ahead of it, and I don't know. I think $300 a share is quite well. Actually, be $240 if I'm looking to buy here. $240 for a share, I think, is quite reasonable considering what Tesla do and the things they've got planned. James, looking to Japanese government bonds. There is something brewing that's going to bang. Yen should strengthen soon with Jap. Oh, that's something I didn't tell you guys about, and I completely forgot. I did cut my Swiss yen shorts. So I took the loss. I swallowed my ego a little bit on these ones because I've been talking about Swiss yen shorts for basically since the start of the year. So it's been 7 months now that I've been talking about this trade, and I was in it. I've been in a few times. So I think I sold, I can't remember when. I think I sold here and took some profits slightly lower, and then I was sort of DCAing this. I only had 2 positions in, very small. So I think I took, it was just over 1%. I think it was around a 1.2% loss on Swiss yen. So it wasn't anything significant. Bearing in mind, on a typical swing trade, I risk 2%. So 1.2% loss for a position trade is completely fine for me. So I still love the idea of going short, and I really do think that this trade is going to play out eventually, but it's just a waiting game. It's just not something that is ready to go yet. So I had to take an objective view. I had to sit back and just say, look, say this to myself. I'd say, James, this just isn't working out. We've broken the previous highs or broken up previous all-time highs. Swiss is just appreciated. It's getting stronger and stronger. Bank of Japan's not hiking rates. The trade needs to be put on pause. So I still like it. I still will take it eventually, but for now, yeah, back on the sidelines. Japan wants dollar to go up. Yes, Swiss yen, same issue. Yeah. Well, It is what it is. I think the markets are a little bit extended right now. We've got dollar crosses like euro dollar extremely extended. We've got euro Swiss that I view extremely extended as well. NASDAQ and according to Bollinger's are extended. So yeah, it can be a little bit tricky at the moment. I've not really got anything solid. I think Aussie, New Zealand, DAX, maybe even silver actually, and NASDAQ probably the only things I'm interested in. But yeah, NASDAQ doesn't seem to want to go lower at the moment. I'd like to go long euro dollar as well at some point, but again, I just need to see that pullback. Dollar is spiking. Yeah, that was because we had pretty good news today for the dollar, although it doesn't seem to have really led into much. A little bit of a push to the upside, but very little follow through so far. Again, as we said earlier, I think markets are really paying attention to Thursday's news. AUD USD will fire up. Who was the guy? Was it? I've not seen him here today. 24/7 Betterman. I know he was looking at Aussie dollar. I think he wanted. I can't remember what level he wanted. I think it was something quite crazy. I think it was like 0.5. Aussie dollar. To be honest, I quite like the short idea, just from a central bank perspective. We've got the Fed that seems neutral to hawkish. We've got the RBA that seems like they're going to cut in July. So we do have that rate divergence, but the dollar is just not holding up at all. It's like a paper house at the minute, it's just getting blown about everywhere. Tesla's a lifetime opportunity. Yeah, we'll see. Yes, I've not seen a few people in here. We've got 0.05, crazy. Well, if that's his plan and he's got a reason for it, then fair enough. But I think he might be waiting a while, unless we see some massive US dollar dominance come into play. Tesla market gap to open, but not really doing too much. Actually, sorry. I think we've got Chris Pulver coming to take over in probably a minute or so. So Chris will be coming to take over the show shortly. However, until then, I'm just going to review. I think I'm going to take DAX, to be honest with you. I really like this. I'm seeing a little bit of rejection here. So I think this might be the play. So I'm actually going to scrap the second idea and look for something more like this. Relatively tight stop. Take profit, maybe just at this fib extension with the trailing stop. No hard take profit, but that'll be a mental take profit. Nat gas is a play. Why nat gas? Yeah, I mean, I like nat gas. It seems to move really, really nicely, especially with seasonality, actually. I've noticed that I don't trade nat gas personally, but I got a friend that does trade it, and he does implement seasonality, and it works out quite well. It's pretty accurate. So yeah, I do quite like it, but it's just not my area. So yeah, I think after stream, or after I end the stream, after the H4 candle closes, so in about an hour and a half, if we can close bullish from this level, I'll take a long. If we don't close bullish here and we end up coming lower, then I'll look for the initial idea or the original idea, which is a entry at the fib here, which would also line up with this 200 moving average, which I really like. I think this is probably the better idea, but I've got to take what I can get. Gold seems to be having a little bit of a stall here. Yeah, I'm not confident enough to take a short. I think that might be a little bit too aggressive for me. Nat gas broke structure. It's retracing and it's going to be a massive wave up. Interesting seasonality. I'll take a look ball out. Okay. Oh, Bashi, good to see you. You came a bit late. I'm about to head off. We've got Chris Pulver coming to take over the show. Guys, have a good one. Thank you all for watching. I appreciate all of you. I'll see you all soon, and it's good to be back.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, how we doing? Welcome back. Happy Tuesday. Just got a couple trades running right now. I'm looking at some profit on a little SPX action up around 30 and 40 cents respectively. So I'm going to try to go, let's see, we're kind of falling off a little bit. So 30 cents. Let me see if I get out of here for maybe 25 cents. Which one is, so the call fly is trading. Let me see if I get out of here for like 25. Now let it marinate a little bit longer. I want to see some more profit on the call fly. So this one's break even. This one's up. I guess I'll just leave it alone. I was looking for the call fly to pay a little bit more. So price is kind of right in the middle of my zones. I have a broken wing butterfly up here, broken wing butterfly down here, and price is in the middle. So it's in a good spot. I'm just trying to get profit on both sides. It actually looks like this morning. And the reality is I'm in the middle. So, I mean, there's still some time that I need to sit in the trade if I want to go towards the max credit. And then obviously I've got my profit traps on either side. So by the end of the day, potentially have that little profit trap. That's the hard part though, is like waiting all the way to the end of the day and seeing if we're going to stay, basically between 61.56 and 61.64. There's about a $9 window there and a 62.11 to a 61.19. That's kind of my profit trap by the end of the day. If we're in between there, fine. Like I said, if we're kind of in between these levels, this should be really good. So right now it's looking better. Like call fly showing a bit more profit and put fly showing a little bit more profit. I'm just going to kind of let these marinate. Collectively, if I can get about 70 or 80 bucks on the morning, I'll take the trade and be happy with that. Okay, anyway, I'll monitor those. I'm just going to spot check that on my other chart. Let's see if we have any major levels this morning. I see a big sticky level around 62.20 today and around 62.25. So SPX gamma levels, liquidity levels between 6,200, 6,225. Hopefully, I mean, I'd love to see it just really sticky around 6,200. Okay, so we'll come back to that one. Let's go top down. Apple had a little surge yesterday. I saw, I mean, I was interested, like Apple's up and there's like a big antitrust lawsuit that's getting thrown out. Also saw that the market seems to be focused on like Apple throwing in like, they had something on like Anthropic AI yesterday. I don't see where this it was yesterday. More events. Out of favor, Apple holds key to tech. I mean, I agree. I mean, I think Mag 7 is your key to like this market holding up. I could have swore I saw something on Apple Anthropic yesterday. Anyway, all right, never mind. Let's go top down. So we are sitting just slightly lower. The market gapped a little bit lower. We're still red on the day, 0.15 in the SPX. Qs are down about 0.4. Okay, so Qs are selling off a little bit. SPX is hanging in there a little bit better, but maybe turning slightly. We have not had. I mean, look at the last few weeks of trading here. This is SPX. Let me go to a slightly but bigger time frame. We've had a lot of up days here after some chop. So this was, Musk and Trump. This was Israel, Iran. This was a ceasefire. So these monster gaps we've seen in the market have been just thrusting the market higher. If I'm not mistaken, is this your U.S.-China trade agreement gap? I'm pretty sure it is. So U.S.-China trade agreement gap is like not agreement, just rather like the 90-day pause. So there's the pause of U.S.-China. Market rips up, pulls back, and retests. Higher, higher, higher. Stalling on Trump and Musk, stalling on Israel, Iran, ceasefire, ripping up, and just there's your thrust. So here we are, poking all-time highs again. I was a little shocked going into the end of the month, end of quarter, that the market did. Give me 1 second. That the market did have a run. That the market ran up into the end of the month, end of the quarter. I thought with a major kind of quadruple witching OPEX cycle, like you've got index options, futures options, stock options, and VIX options, like all four were expiring towards the end of the month. And that was on the, well, I guess that was the 20th of June. And then yesterday was end of month, end of quarter. But nevertheless, we're at all-time highs. I did kind of an interesting trade yesterday. If you're interested, it's in the Pulver Alerts. I did a call condor, and that's just a fancy way of saying I'm actually selling the market a little bit. It's defined risk. It's up here. So I looked out because it is officially the first day of the new quarter. I looked out to around the 10, 20 delta area, and this is roughly what a resistance level should be in the market. Something should be like around 6550 to 6600, somewhere within about 50 to 100 points. This is going to be, and I'll try to verify it on some of the big gamma levels that I can find, but this should be roughly where the kind of quarterly resistance is. And then the support level is going to be down here around 5750. So if you want to write these levels down, it's about 6600 to about 5700. That's kind of roughly this like big quarterly ceiling and quarterly floor. All right. I don't know, if the market's just like, it doesn't care at all and just melts up because Trump is trying to get Powell to cut rates more aggressively. Look, the Fed's already cutting 3 times. We're cutting into inflation that really hasn't made a huge improvement. It's a little bit better, but yields are still sticky, and this is the biggest question mark I have going into the later part of this year. If we go U.S. 10-year yield, okay, we're still not below Liberation Day lows. When remember in the U.S. government, like when Trump and Bessent were celebrating, hey, the 10 years below 4%, as the market is tanking. Okay, we're not down below Liberation Day levels. So I don't know if the Fed cutting 3 times this year, which is probably going to equate to about 75 basis points. I don't know if the bond market is going to price that in as a good thing. We don't know that yet. Okay, all right, let me check one thing. So up 40, up 20. Just going to look at maybe modifying these. So if I go 30 and 30, let me see if I can get here. So I'm going to go 30 cents. And 25 cents and see if these will fill. Okay, I'm going to modify these just a little bit. Give me a sec. So that would be 30 and 45. That'd be $75 on the day, which isn't bad. I'd take that and eliminate some of the risk. So I'm going to make these adjustments. Update. Give me a sec. That's the call side. Plus, what is that? 50 and plus 30. Okay, sorry. So the 10-year yield's watching closely. The Fed, let's go to inflation here on, I had my edge finder. I'll bookmark this in just a sec. All right. Just want to go into our inflation numbers because they have been reading a little bit warmer. We have non-farm numbers as well. So this is what's coming this week on Thursday. 25 cents just got filled. Okay, good. Okay, I'm just gonna let that marinate. Let me try one other. I'm gonna see if I can get another put fly in. July 1st, put fly 85. Try to get another 70 cents here if I can. Okay, just gonna move a couple things around. This one is ungrouped. Okay, so I still have this one running. Going after this one. See how it plays out. Okay, just a couple tweaks on the fly. All right, inflation data. We have CPI, PPI coming out next week. So let's go year over year. And I'd like to go back a little bit farther if I can. Let's go back to like 5 years. There we go. So here's the whole inflation story. 9+% peak all the way down to 3%. Sticky, 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 sticky. A little bit of trend to the downside, but that trend has stalled. Passing a $2.4 trillion tax bill, forcing the Fed or asking the Fed, begging the Fed, handwritten letter, trolling the Fed to cut rates faster. All that's going to do is just run the economy hot. I don't think this is good, but again, what I think and what the market do are maybe two different things. My point is this whole inflation target at 2%, we're not close to it. If the Fed was going to be cutting rates, it's like you'd want to see inflation targets down below. We want to be sub 2% in order for the Fed to be like, yeah, we can cut rates now. But anyway, we're just truly between this 2 and 3% level. That's where we've been since 2023. So is that really where the market is just we're just acknowledging that we're never going to get to 2% inflation. Inflation this last week with core PCE was a little bit hotter, and yet the Fed's going to say, hey, we're going to cut rates 3 times. And maybe they do. Maybe they do. So here's the watch tool. The big change we saw from last week is now we're looking at a September, October, and December rate cut. That was the biggest change. So July is still expected to be a pause. We still have inflation data coming out in July. So it's July 1. We have inflation data next week. We'll see if it's hotter. We'll see what the CPI year over year is. We'll see what headline is. We'll see what core is. But the pause is still likely going to be the same. 80% chance there's a pause. Cut September. Cut October. Cut December. Is that because Powell is bowing to Trump? No. I think because the Fed is somehow in agreement that inflation is improving. I also think the Fed is doing it because they do see a softening labor market. I think the trade war has pivoted hard, but I think this tax bill is maybe the next big thing where it's like we don't know what inflation is going to be. $2.4 trillion is not nothing. Like it's crazy that it would just add more to the deficit. I think gold is still a good play. Bitcoin is still a good play. The dollar has been probably one of the easier sell trades in 2025, as we are still making some lows. I had a lot of questions yesterday in one of my afternoon sessions. What do we do on the dollar? I can't justify selling the dollar at these lows. This is a symmetry level. Just be careful of this. There's a symmetry level right here that I do think the dollar at least catches a bit of a bid on. So if you're, long euro dollar, that's been a good trade. If you're long pound dollar, it's been a good trade. If you're long Aussie dollar, New Zealand dollar, it's been a good trade. If you've been short dollar CAD, it's been a good trade. Point is, if you've got profits, move some stop losses, right? Move some stop losses. Why? Because I think at this high, low, lower high, lower low, I could see this dollar at least catching a bit of a bid. It may not be this big, crazy move to the upside, but even if we get a move back into, let's say, 100, or even like past support here, around this like 101. This level's around 102. So I'd say between like 100 and 102, the dollar could potentially have that squeeze trade. Okay. So maybe it doesn't. Maybe this is just a slow death to the downside, and the dollar is truly just going to be a move all the way to 90. But I still think there's waves. So if this is one, all this is wave two, the market set up to then fall. You got symmetry, and then we get another pullback for another fall. This does line up to be a good medium-term trade. If we get another chance to sell higher, I like the dollar selling. I like the dollar selling for another wave. Okay. But that pullback to me it's either a pullback into here around, like I said, like 100, 101, or 102. I'm looking to sell and fade that dollar. Okay. All right. Gold. Gold is up today. I still think gold is limited to the upside. Gold can certainly run a lot hotter if the dollar gets weaker. Gold can run. I think technically something is possibly going to have a bit of a consolidation or a pullback to at least tap these levels. I've now been on this kick for a while, but the pullback, the 144 moving average, the 200 moving average, it's a long bar count. It's 400 plus bars all the way since, this would be daily charts. We're going all the way back to October of 2023 is the last time that we hit the 200 moving average. And we're now sitting around 442 bars. 442 bars. Okay. It doesn't mean that it has to come right back to it. But I just think that the upside, until we consolidate more, okay, until we consolidate more, maybe give us a chance to buy at like 3,100. Maybe if we're lucky, a stab at like 3,000, and that becomes like the next big floor. But from a 3,100 to 33,000 level, I'm going after new highs again. So I think that gold right now is likely not going to break higher and go substantially higher without having more consolidation. So I'm still patient. I'm still waiting. If I want to add to gold futures, if I want to add to any of my gold positions, it is going to be at like a 3,100 to 3,000 correction. And I'll just be really patient. I think we get there. I don't know if we have to have a bit of and it's interesting because like risk off tone in the markets might actually be good for gold. But I think it's that potential pull in the dollar. If the dollar rips up to like 100, 101, 102, I think the gold side, maybe falls a little bit. But all that is a chance to kind of get the dollar less crowded, free up that side a little bit, so the real sellers come back in and flush it down at a better price. Gold offers a pullback that hopefully the whole world wants to buy, and this maintains a pretty strong bid around like the 3,000 handle. Silver, I still like silver quite a bit. We're consolidating around this like $35, $36 handle. I've been talking about the all-time highs on silver. Something could be really fun about silver, which would be if we clear $40, if we get like better than $40 on silver, I think 40 to 48 to 50 could be very fast. I think if we clear 40 or clear this 41 target, then we could go from 41 to 50 very quickly. I am hopeful that like that's the play. And if we start to really blast off through in the 50s, then I'm trailing stop losses because we're going into some uncharted territory with all-time highs. But I'm still after this silver trade with about 30 to 40% more upside, and that does get me pretty excited about a metals play that could do pretty well. That's 31% to get to all-time highs. If we blast off through that, any excess would be kind of the gravy train on silver, but I still like it. Bitcoin is kind of your, new hedge against fiat. It didn't take long for Bitcoin to get the type of mainstream adoption where, IBIT, for example, like the BlackRock ETF, has as much inflows or market cap as what gold took like 8 years to get. So it's not nothing. We're still hanging out at 106. The markets are obviously like at all-time highs. S&P and Nasdaq all-time highs. Dow is not. Russell is not. But Bitcoin is sitting near all-time highs. I do wonder like what this is going to look like. Is this just more consolidation that's just very brief before we get a thrust higher? What happens when the tax bill passes? Does that help surge Bitcoin higher? What happens when the Fed starts cutting rates? We start printing more money. We've got money supply at all-time highs again. Does this help Bitcoin go higher? Maybe. I'm still long Bitcoin. It's not a difficult trade. It's just I'm long Bitcoin. Measured moves. I've got Bitcoin measured to about 130 this year. If we hit some fib levels, 140, 150, there doesn't have to be necessarily like a profit target. I think that it's just if you're getting some gains in appreciation, you look at it like a dial up, dial down your percentage allocation. If I've got 5% allocated to Bitcoin and all of a sudden it's showing 8, 9, 10% of my portfolio, then I can take that profit. I can reallocate it where I just dial it back down to 5%, or I try to maintain like a steady allocation percentage. But I do like my combination of SPY, Qs, gold, silver, Bitcoin. 5 ETFs you can trade that I think provide a pretty good basket. Obviously, trading some options to protect the downside. But I think that's 5 simple ways to approach the market, have some good upside. Okay. All right. MicroStrategy at 385. I still have a January call. Look at this. If Bitcoin makes new highs, this should be back up into the 400s. I have a bull call spread that can pay about $1,100. I've got 15 of them. So that could be pretty good. That could be like 15K on just some income. I did have some calls. I do have, let's see, I did this to do yesterday. I rolled some calls on Intel. Or no, I'm sorry. I gotta do that. July 3rd is my expiration on Intel. So I'll roll out some Intel. I rolled some Snap. I rolled some JD. I'm going to wait on Pfizer because the premiums are just crap. I do have to add a leg to my diagonal spread on TLT. I did roll IWM out to August. So if anybody's in my campaign trade on IWM, let me find it here in Pulver Report. So let's go IWM campaign trade. So I'm going to update this. Oops. SPY campaign. There we go. So it was updated on May 8th. I've got the hedge on there. Let me update this one. So jump to that trade and add. Okay. So I'm going to update this one. So this is going to be a reply to my campaign trade. So IWM campaign trade update. So one bought shares, added 516, covered call. Let me get an add on here. So IWM. Okay. So I did a 516, added, or I should say rolled to a 530 covered call, and then rolled to a 6.6 covered call, rolled to a 6.9 covered call, rolled to a 6.30 covered call, and rolled to now an 8.1 covered call. So the break-even price is 192.44 with the sell call. It's a 201 strike. So right now on Russell, I've paid for my entire hedge, by the way. So I'm hedged to the downside on Russell. I've paid for the entire hedge with another $300 to $400 of profit, and I'm still going to keep rolling the Russell. So I went from I bought the shares at 199.85. I've rolled enough on these covered calls that now my price is down to 192.44. So I've saved $7.41. My hedge trade only cost me $500. So I've got some income regardless. It's a free hedge all the way to the downside. That's probably worth like 20 to 1 or 16 to 1 or something ridiculous like that. And also I'm going to keep adding some calls. Okay. So I'm going to keep doing this. Let's see, 192 with the break even 192 with a free hedge on RTY, which is my Russell futures trade. I will continue to roll IWM for income. Okay, so that trade's been updated, right? So from initially buying the IWM at roughly $200, we're trading at 215. Granted, like I've given up some upside, okay, but with a hedge to the downside and income, I'm still looking at about $300 profit guaranteed. And if I keep rolling, if I roll it out another week or two, then there's $400 of income. I roll it out again, $500 of income. Roll it out again, $600 of income. Roll it out again. So, I mean, this stock price is most likely not just going to rip all the way to 244. Okay, if it does, then I'm obviously going to be way behind here, but I'll keep rolling it. That's the nice thing is I can keep rolling it, right? So long story short, I'm going to keep this. That's why I call it a campaign trade, because it's something I'm going to continue to work with. Okay, all right. So that's Russell. The VIX is down to 1702 today. Spot checking a couple of levels. We do have some support around 6175, 6170. Let's see if it kind of stays choppy right in this like 6195 to 6200 zone. Still watching a couple of butterfly spreads on my end. Price today. Let's watch this one. Let's set this one to 6175. There we go. So these are the two levels that I'm watching today. Call side should be looking a little bit better for profit. Okay, I'm going to take this one down to 15 cents debit. That should be filling at 15 cents. Okay, so quick update here. That would be so 45. Oops, one sec. Okay, not bad. Okay, so taking some profit there. All right, IWM, just going to keep campaigning this thing. Same thing on Tesla. I'm going to roll some calls on Tesla. The expiration is Thursday. I'm just going to try to pull out as much of it as I can. So Tesla's down like 5+% today. Big gap on Tesla. I'm not sure what the news is. Criticism of its reliance on U.S. subsidies. Funny. Fine. And then all of a sudden, it's like this news is going to change. It's like as soon as Tesla has humanoids in their factories, like this stock is going to be very different. So I don't know. It's just volatile. It's love to be hated. I still think it's way more than an automaker. So I think when it comes to, you know, what they're doing in the AI space, in the energy space, in the yeah, I mean, it's just more than automaker. So granted, it's trading really expensively, like price to book, price to earnings, but so is Amazon forever. You know, it's like I think Tesla's one of those stocks where the nice thing is I just keep selling calls on it. It sounds stupid, but I keep selling calls. My break even on Tesla is down to like 220 right now. So I've got another expiration on the 3rd, which is Thursday. So I keep selling some calls. Okay. Yep. I keep hearing about Robinhood. Everything's Robinhood. Everyone loves Robinhood. Yeah, I've got a trade on. My trade on Robinhood is a ratio spread. So Robinhood is a ratio spread. It's already up about 41.5% of max credit. I pulled in $1. I did way out of the money ratio spreads because I said, look, I'm willing to own Robinhood. I know they've been getting a lot of love lately. This stock has been just a high flyer since that pullback in April. You know, from $36 up. I mean, that's crazy, right? One stock is up 180%. Feels great. Just, you know, I wasn't going all eggs in Robinhood. Good for them. It's still ridiculously overbought with a lot of diversions at the top. You can see this. So that's my little indicator there. So I expect a pullback. I'm not going to short it, you know, but it wouldn't be surprising if we have a bit of a pullback. So let's find out. I put in a bear call spread in AVGO. Right now, that's looking a little bit better. And I put in a bear call spread on the Qs, which right now is just upside down a few. My break even is 542. AVGO, my break even is should be around 266 and change. Let me check on that one real quick. So AVGO is down about $2, so almost break even there. I've got a profit target set on this one. I'm just going to put in a bear call spread. So pulled in $1.30. I'm going to try to close this thing down for 30 cents, hopefully. So try to grab $100 out of that one. Qs, bear call spread down about $20. I'll keep a close eye on this one. This is out to July. So if we have a bit of a downturn, this one in for 59 cents. Let me see if I can close it down for, let's go close it profit target 50%. Yeah, to 29. Try to get a 50% winner on that. Ag's asking about the ratio spread. Yep, I'll talk about that. Do you give me a stock that you care to own? It's an easier way to explain it if it's a stock you want to own. That's the way I look at every ratio spread. I'm willing to own the shares. That way I take the trade. If you're not willing to own the shares, it's okay. You just have to manage the put side. So give me, it's 10:54. Give me 6 minutes. Let's have a little session on ratio spreads at the top of the hour. Okay, I want to get through a little bit more top down here. Let's take a look at currency strength. So Fed watch tool, like I said, expecting to cut 3 times this year. Inflation, we'll have more CPI data coming out next week. It should be next week. I'm not going to have a forecast for it, but we go to this week, we're squeezing in non-farm payroll, unemployment rate, and initial jobless claims, which I think is probably pretty important to watch. And then next week, we should have another round of CPI data. Let's see here. Tuesday, nothing. Wednesday, nothing. Thursday, so we don't have it next week. What the fudge? There it is. So the 15th and 16th. So we're 2 weeks away. 15th and 16th, Tuesday and Wednesday for CPI data and PPI data. The Fed is not until the 30th of July. So that's our next round of inflation on whether or not this is going to be ticking higher, lower, steady, the same. They've done a pretty incredible job of we're going to forecast 2.4. Notice that it comes in 2.4. I'm not saying that this is false, but certainly seems to be hard to believe that they're spot on and super accurate. But I guess when you start removing stuff, it's like, hey, remember that energy and food stuff? We don't want to count that with inflation, so let's go and call it core CPI. Remember that shelter stuff? Yeah, let's call it super core. You know, I mean, that's why they keep changing it. But point is, inflation isn't going away. Adding $2.4 trillion to the deficit can't be a good thing. Inflationary, but again, stocks typically rally because of inflation. It is arguably one of the best hedges there is against inflation is just having assets. You know, assets go up, gold goes up. So it's not a bad thing to be a position in the market. It's just Does the market care enough to be like, hey, inflation is now a story. Hey, higher unemployment is now a story. Hey, tech not hiring is now a story. The market may or may not care. You know, big crashes we had in the past, we had the market hit all-time highs before the market crashed. Happened in the dot-com bubble, happened in 2007, 2008. We went back to all-time highs before the market actually fell. So we'll see. All right. Stock that you had a slide on yesterday, Pfizer. Cores. Oh yeah, yeah. Core. Yeah, sure. We talked. Yeah, cores. We talked about. So here's an example. Cores. Let's talk about cores, because is it safe to say this for? I'll talk ratio spread here. So I'm just going to give you like a little bit of a strategy review. We'll talk about a ratio spread. Are we okay saying that, hey, look, I know that I can't really position this cores trade in order to get my position below the lows at $6, but I could potentially get my position here around $10. I think that's kind of fair, because we had this huge move to the upside that's probably going to fade a little bit. But there's a couple ways I can do this. Let me go to CORZ. Okay, I'll go to CORZ. And I can go, look, I can do something kind of wild here. I can go all the way out to like January 2027, which is way out in the future. But I'll say, look, if cores is still around, CORZ around, I've got an option chain out 563 days. Let me flip my option chain. I can absolutely do a trade like this, a 10 by 8. But unfortunately, I get no credit for it. I can do a 12 by 10. Now I get profit. So here's what I can do. Okay. If I do a ratio spread, the way a ratio spread works is this. Okay, ratio spread. Basically what it is, it's a combination of a bear put spread, which is a bearish debit spread, and a naked put. Okay, so the naked put acts as the line in the sand to own the underlying. Okay, or the naked put is something to manage for, let's say, 100% or 200% or 300% stop loss of credit received. Okay, so my approach is this. I'll move this up in the white space here. So my approach is this on a ratio spread. My approach to a ratio spread is I am willing, I don't need to emphasize willing, I'm willing to own the shares. Okay, so the naked put for me is, it's a line in the sand that if it's below that, I'm willing to own the shares. The other side is, if you don't want to own the shares, manage the naked put for a stop loss to avoid big loss. And I say big is relative. It's like if I own the shares at $8, I mean, unless I'm going in hundreds and hundreds and hundreds and hundreds of shares, it's not that big of a loss, right? So it sets me back, $800 on 100 shares. Okay, I can manage that loss. But I'll show you this. So let's look at this trade, and I'll tell you exactly where I can kind of position for this. Okay. So if I say, okay, I think this like $11 low is pretty fair. I think we've got like a 10 by 8 or a 12 by 10. What's nice about this, if I do the 12 by 10, I can pull in 85 cents credit. Now I'd like to pull in a bit more. You can see here, it's kind of weird on the bid price on the $12 strike. I could do I could do this. This is not a bad trade. I'm surprised it only pays me 50 cents, and this one somehow pays me $1 and change. Anyway, I'll just say this is the trade. So if I do a 12 by 10, here's the way this trade is constructed. So here's an example. For the January 2027 expiration, so it's out in the future, okay? I buy the $12 put with one contract, and I sell the $10 put with two contracts, right? So if you have a if you buy the $12 put and sell the $10 put, that's a $2 max profit debit spread. And then you have another, which is a sell $10 put. That's a naked put. So the combo is you have the buy 12 put is a +1 because you just buy one contract and then you sell the 10 and you have -2. So you have the one $10 strike is a part of the debit spread and the other $10 strike is a part of the naked put. That's how this works. Make sense? Okay, so the way this trade works as far as ownership, if price, so if CORZ is less than 10 by expiration, I'm assigned the 100 shares. Because remember, I have a 12 by 10, which is a debit spread that I can max out for $2 profit. But if it's below $10, I still have one contract that's a naked put. So I'd own the 100 shares. And I get assigned at $10. Okay, but I have the 12 by 10 debit spread, which offers $2 credit. Okay. And I have the ratio spread credit from the beginning. So the math on this ownership is as follows. Assigned at $10. If price is below $10 by expiration, I'm assigned the shares at $10 minus the $2 debit spread credit and minus the, let's say, $1.35 ratio spread credit, which gives me a break-even price. And this is kind of what's special about the ratio spread, in my opinion, is even though I'm saying I'm willing to own the shares, the nice part is I can own it for pretty cheap. I get assigned at $10 minus the $2 credit on the debit spread, and then minus the $1.35 on the ratio spread. I can own the shares at $6.65. Okay. So if that works out to be my break-even price, I mean, even if I'm assigned at $10, I mean, $6 gets me below April lows. If I own it at $6.65, this low is $6.26. I'm only like 30, 40 cents away from owning the shares at like potentially a crash point that the market had this year. So that's how I use a ratio spread, because I'm trying to tell myself, look, I don't want to buy this thing at $16. It's already gone up. I mean, from this April low, this thing's already up 180%. Robinhood's already up 180%. I'm not interested in buying and chasing a stock like that. Okay. What I'm interested in doing instead is, can I find a way to construct a trade where I'm willing to own the shares at a price that I said would be good? I'll own the price here at $6. So I can own it at $6.65 and then add a covered call and repair it. Or own the shares and say, look, I own it now at $6. Now what does it do? Does it go back up to 17? Does it go back up to 10? Does it go back up to 13? Does it go back up to all-time highs? That's your choice. But if you believe in a stock and you are willing to own shares and own it at a discount, a ratio spread is a great way to do that. And most of the time, I'm never assigned these shares. So when I build a ratio spread out in my pulver alerts, you will see like I have a probability profit, I have a chance of assignment, and they're usually less than 10%. There's not a lot of times I would put a ratio spread on and say that I have like a 50 to 60% chance of assignment. Most of the time, it's like less than 10% chance of assignment. And that's kind of the reason I take the trade, is because I don't oftentimes get assigned. And so it just becomes an income trade. So for example, in 2025, how many ratio spreads did I do? A ton. When this market was dropping hard in March and April, I did ratio spreads galore because it was on Apple and it was on Google and it was on Tesla and it was on Meta and it was on Microsoft and it was on Netflix and it was on all like Coinbase, like all these stocks where the price was dropping like crazy. I'm like, well, I would be willing to own the shares at this massive discount. And so I had high volatility, which means high premium to sell. And so I went way out of the money on these ratio spreads. And I gave myself essentially like look, the stock would have to be down 50, 60, 70%. And then I'd own shares. That's how it worked. And I never got assigned a single one. I think actually I take that back. I got assigned on Tesla. I got assigned on Tesla because Tesla jumped 55% from the post-election highs. So Tesla got assigned and I took the shares. I added a covered call and I flipped Tesla for like $7,000 in like 2 weeks. And then I did it again and I took the assignment and I flipped it for another $9,000 in like 3 weeks. I'm in Tesla now and I'm still flipping it and I'm still rolling it because I look at this point, we stabilized. The bottom at 220 is pretty safe. We ripped up to like 300 plus. I think Tesla is going to be a stock that I can just keep adding some covered calls and premium. And right now, let me do the math on my Tesla positions here. Let me find there it is. So my spreadsheet, let me go to Tesla. Okay, so I have a break even at 260 for a 280 covered call. Okay, I have a break even of 232 for a 260 covered call. So between share wise, I mean, I'm pretty sure there's about $30 a share. So $30 a share on 500. So I've got about $15,000 in Tesla on one chunk of accounts. And then I have some new clients to get added in. And that other one is 260 to 280, another $2,000. So plus another $2,000. And then plus another, let's see, 319, 355. It's another $3,500. So if all goes well right now, I'm looking at another about $18,700 on Tesla. If I let my stock get called away, I'm making about $18,700 plus the $16,000 I've already made. So yes, I've owned shares of Tesla, okay, but actively trading some options. And again, it was a ratio spread that kind of started this whole thing for me, but a ratio spread that I was willing to take the shares, own the shares, and repair it with some covered calls. You know, Tesla's made me, it potentially is making me like $34,000 this year. And I've owned some shares, but I use that capital to repair it. Make sense? All right. So any questions on that? So I do ratio spreads quite a bit. Again, my intention is that I'm willing to own the shares. Okay, I'm willing to own the shares. All right, let me check on one thing really quickly here. And watch that one for the day. I think we got some levels here to potentially bounce off of. These got the 60, 75, and the 70. Let me see if I can get something around 62. Try something here. Call fly. Try to get a little bit more premium on a put or a call fly really quickly. Come on. All right. Just watching some. I'm just getting some levels to bounce around here on the SPX. All right. So that help on the call fly stuff or the call fly, the ratio spread. So for example, I mean, I'll show you some of the stuff I have in Pulver Alerts in the portfolio. I got lots of ratio spreads. I'll try to figure out what I have. So I had a bunch of the Mag 7s. Here's one on Airbnb. Here's a bunch on Amazon. That's a bear call spread. Baba, no. Baidu, just own some shares, some credit spreads on Baidu. Bros, ratio spread on Bros. Yep, so that's Dutch Brothers. Let's see here. Costco, have some ratio spreads on Costco. CrowdStrike, this is a 111, which is kind of a modified version of a ratio spread. And max profits around 408. I'm up about 78% of that right now, so not too bad. Dell, ratio spread on Dell, up around 40% of that max credit. The Dow, just own some shares right now, nothing crazy. Disney, nothing. DJT, nothing. Brazil, China, FCX owns some shares. It's up a decent amount. Naked put combo on. This is copper, Freeport McMoran, up around 63% of that max profit. That's my Euro stocks trade. GLD, that's a ratio spread there. Google, ratio spreads. Like, I mean, I have lots of them. The reason why is because they work. The reason why because I like them. Now, one more thing before I wrap up on the ratio spread side. Obviously, I've got enough capital in my accounts where it's like I can do a Mag 7 stock that's $200, $300, $400, and I can still allocate the type of capital. I can own Tesla at $250 a share, $300. I don't love doing that, but I can. I can own the SPY. I can own the Qs. I can flip some of those like bigger allocations and I can repair them. But the other way to manage a ratio spread is if you don't have the capital to manage a ratio spread, you look at the put and you manage the put. So here's an example. SPY's expensive. Let's go to the Russell, a little bit cheaper ETF. Okay. If I went out to the Russell and said, hey, look, I don't think the Russell is going to come back below $170. So let's see how far out we'd have to go on Russell. It's a cheaper ETF. If you think that the market's going to find a way to have S&P at all-time highs, NASDAQ all-time highs, Dow hitting all-time highs, maybe the Russell playing catch up to get to all-time highs. If you're that bullish, Russell's obviously a cheaper ETF to play. Okay, so if I went on Russell at IWM, let's go out to the end of the year. Okay, and say by the end of the year, end of the quarter, December 31st, the Russell, I'm willing to own the shares at 170. Okay, so if I buy the 175, sell the 170 times 2, I can turn this into an income trade and pull in $1.70. Now, if you're telling me, hey, Chris, I don't want to own the shares of the Russell at 170, I don't have that much cash, I don't want to tie up, $17,000 cash to own the shares, that's fine. Okay, what we can do instead is this put is offering $2.11. Okay, so $2.11 credit. Now, the way to manage that trade is if this turns into 422 or turns into 633, debit or debit. Okay, this would be a 100% stop loss, and this would be a 200% stop loss. That is a good way to manage this. Because if you don't want to own the shares, you don't want the assignment. If this is trading at a $6 debit, the most I can lose is about $400. That to me is more manageable than being on the hook for getting tied up for 17K in ownership. Does that make sense? So if you don't have the cash to own something, then a 1 to 200% stop loss can oftentimes get you out of the trade with a manageable loss, and you go find another trade. But again, what I like about this trade is right now by December, there's about a 95% chance that this trade is going to be profitable to keep the full 174. Okay. So, and if I have the buying power, I'm not looking at the max loss because I'm going to own the shares and repair the shares. Okay. But that to me is a pretty good income trade. So we've got a probability profit at 95. I've got a delta at 10, which means chance of assignment is around 10%. Probability of profit is around 95%. And if I did own the shares, then the math works this way. I would own the shares with an assignment at 170, which means price has to be below 170, minus 5 on the debit spread, minus the 174. I'd own the Russell at 163.26. 163.26. So from current price, 163.26, the Russell would have to drop around 24% from current price. Like, we're talking, there's some pretty serious problems that the Russell's going to drop 23%, 24% by the end of the year, right? We're not in a bull market if that's the case. So is that a good trade? I mean, could be. The question is if I'm willing to own the shares, I got to be willing to say, hey, look, I'm going to own shares in here and make sure that that's support. I've also got to be willing to look left on the chart and say, well, this is a COVID crash. Does this market come all the way back down to $100? If it is, can I use covered calls and lower the cost basis? It's like, I can lower the cost basis. If I own shares at $164, I could lower the cost basis down to 140, 130, 120. It'd take time, but I could lower the cost basis over time. So point is, like, if this is where the market's going to get to, if we go low to high, pull back, higher high, that ratio spread pays me $175 with a pretty high probability of profit. Okay. And that's how I do it. Because if I own the shares, I'd own it. I'd own it at 163. I'd add covered calls. I'd repair it. I'd try to make $500 to $1,000 and I'd get rid of it. I'm not looking to get tied up in these stocks and own them forever. I'm looking to flip it for income and do it again. Make sense? All right. So that's some ratio spread stuff for fun. Somebody's been asking about currencies. I'm just going to take a spot check on currencies. Today we got some risk off tone, Japanese yen on top, Swiss on top, dollar catching a bit of a bid off the bottom. So dollar was the weakest currency going in the morning at 6 a.m. Eastern time. And now the dollar is catching up. Swiss has been sideways. Yen has been stronger. We've seen a lot of this. We've seen some markets where like the currencies are showing risk off trading, but yet the equities market is still like sitting at highs or maybe even going up for the day. It's a mix. I still think I'll go back to my original thoughts this morning. Dollar index, be careful on the sell side of the dollar. I would not be surprised to see the dollar catch a bid. Okay, TLT is up to 87. I actually need to sell some calls on TLT. It's a diagonal spread trade. I need to sell some calls. I want to get rid of my TLT. I might sell one out for like maybe this Thursday, maybe Monday, because of those expirations I can choose. But I might do like an 88 or 88.50 or 89 call and just let it get called away. Trying to pull in maybe an extra 30, 40, 50 cents. I got 3,200 contracts or 3,200 shares rather. So 3,200 times, let's say 40 cents. I mean, I could add about 1,280 to my bottom line, which gives me about $13,000 or $14,000 in TLT if I get it called away. I don't mind it getting called away. Okay. The reason why is like, I don't want TLT as a big position in my portfolio. It's really not a huge position, but it's an allocation. I'm like, let me get rid of it. Profit, yes. Holding longer, no. I don't want to hold on to it that much longer. Okay. So anyway, that's where I'm at. Okay, I'll put a pin in that for tomorrow. We'll talk some more like top-down macro currencies. We'll kind of do across the board. Sorry, I got a little tangent there for some ratio spreads, but I walked you through it. That way, when you see some ratio spreads pop up in the pulver alerts, you'll get it. You'll make some sense of it. And like I said, I'm willing to own a lot of the shares. I say that in the alerts. If you're not willing to own the shares, consider that like 100 to 200% stop loss. That way, you can manage the trade, get out of the trade, and still save your skin, survive the trade another day. It's not a big loss. Anytime you're doing like undefined risk, you got to make sure there's something there to protect yourself. Okay. All right. I'll let you go for today and come back and do it tomorrow. All right. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.